Good morning, I'm Gary DeWaal, and this is Bridging the Week for January 20th to 24th, and today is January 27th, 2020. The Futures Industry Association and ICE Clear US petitioned the Commodity Futures Trading Commission to amend rules to formally confirm the potential ability of customers to have separate accounts margined as separate legal entities and to limit the recourse future commission merchants may have against one account of a customer controlled by a trader to satisfy obligations of another account of the same customer. Separately, it appears the CFTC and a programmer sued by the Commission for allegedly aiding and abetting spoofing activities of a trader have tentatively resolved the enforcement action. Although the terms of the settlement have been agreed by the CFTC's Division of Enforcement, the full Commission needs to pass on the resolution. This apparently may take up to 3 months. Lunar New Year began this past weekend and is being celebrated in many parts of the globe, including New York City. So I may continue my personal enjoyment of this holiday celebrating the Year of the Rat. Let's get started. The FIA and ICE Clear petitioned the CFTC to amend 2 rules to formally accommodate the distinct margining and handling of separate accounts of the same beneficial owner by future commission merchants as if they were separate legal entities. Previously, in July 2019, the CFTC's Division of Swap Dealer and Intermediary Oversight and Clearing and Risk issued a no-action letter authorizing derivatives clearing organizations to permit their FCM clearing members carrying multiple accounts for the same beneficial owner to treat each account as an account of a separate entity for purposes of disbursements under ordinary circumstances subject to enumerated terms and conditions. Specifically, an FCM could remit funds back to a customer from an over-margined account while another account of the same customer was subject to a margin call. However, this authority is scheduled to expire on June 30th, 2021. Claiming that the lack of certainty as to permissible market practices under the no-action letter and the pending expiration date was effectively a Damoclean sword hanging over FCMs, certain commercial enterprises, institutional customers who allocate assets to investment managers pursuant to investment management agreements, and others, FIA and ICUS filed 2 separate petitions for rulemaking. One proposal mostly to codify the terms of the no-action letter, while the other recommended amending the CFTC's current prohibition by FCMs to guarantee customers against losses to expressly authorize such brokers to enter agreements with customers that would limit recourse to the assets under management by a person that a customer has authorized to control trading in an account subject to heightened risk management requirements. Some FCMs have claimed that because of special reviews being conducted by CME's financial and regulatory surveillance staff, they feel pressured immediately to comply with all terms and conditions of the no-action letter, as opposed to the September 15, 2020 compliance date set forth in the staff's letter, and worry about the consequences of non-compliance. As a result, some FCMs believe they are diverting limited resources from other pressing regulatory obligations in order to complete compliance with the terms and conditions of the no-action letter prematurely. We'll watch how this develops. Jitesh Thacker and Edge Financial Technologies, Inc., a company Mr. Thacker founded and for which he served as president, as well as the CFTC's Division of Enforcement, have apparently agreed to terms to settle the CFTC's enforcement action against the 2 persons. In January 2018, the CFTC charged Mr. Thacker and Edge Financial with aiding and abetting both spoofing and engaging in a manipulative and deceptive scheme for designing software that was used by Navinda Sarao to engage in spoofing involving E-mini S&P futures contracts traded on the Chicago Mercantile Exchange from January 30th through October 31st, 2013. Mr. Sorrell pleaded guilty to criminal charges of spoofing and settled a CFTC civil suit related to the same offenses in November 2018. According to the CFTC, Mr. Thacker and Edge Financial aided and abetted Mr. Sorrell's spoofing by designing software that Mr. Sorrell used to engage in his spoofing activities. Although both the CFTC and defendants have apparently agreed to terms, they requested the applicable court for 3 months to formally resolve the enforcement action. This is because, among other things, the Division of Enforcement cannot bind the CFTC to a negotiated consent order without first obtaining approval, quote, from the 5 CFTC commissioners, end of quote. In the interim, both the CFTC and defendants requested that deadlines for all discovery and motion be stayed. And finally, 2 blockchain technology trade organizations requested the court currently evaluating competing motions for summary judgment in the enforcement action by the Securities and Exchange Commission against Telegram Group, Inc. and Ton Issuer, Inc. for permission to file friend of the court briefs. The 2 organizations are the Blockchain Association and the Chamber of Digital Commerce. Both organizations disputed the SEC's position that Graham digital tokens intended to be delivered through investment contracts sold by the defendants in 2018 to so-called accredited investors pursuant to a lawful exemption from securities law were in fact securities. The organization said the SEC's view incorrectly confused the initial offering with the referenced underlying asset, and in doing so, left uncertain which digital assets generally might be securities, hindering development of an emerging technology and opportunity for societal benefits. The organizations claim that the SEC has given unhelpful guidance regarding its positions and has mostly regulated arbitrarily through enforcement. Well, that's it for this week's edition of Bridging the Week. As always, there's more information in each article and more articles on the article version of Bridging the Week on the website, www.bridgingtheweek.com. Check it out. I'm Gary DeWaal. Have a nice week, one in which a revised new position limits proposal will be issued by the CFTC. And until the next edition of Bridging the Week, ciao.